Good morning and welcome to another edition of Wake Up with YPN. I am Whitney Stormer, the YPN chair for this year, and I have two guests with us today. They are actually committee members on the YPN committee here at the Iowa City Association of Realtors, Jessica Bandy and Tyler Dailey. So how about you guys go ahead and introduce yourself? Let's start with Tyler. Will you tell us a little bit about yourself?
Yeah, I grew up in western Iowa, a small town of about 1,500 people. Graduated high school and moved to Cedar Rapids, where I went to college, and then kind of stuck around, bounced around a little bit over here, and then found my spot in Iowa City. Just got into the mortgage industry about 3 years ago and working for Major Mortgage.
Wonderful. And Jessica, will you tell us a little bit about yourself as well?
Yeah, so I was born and raised in Dubuque, Iowa. Came to the Iowa City area when I went to school at the university. Met my husband, stuck around for a little bit. Ended up starting at Hills Bank in 2008. I was a mortgage processor for about 10 years with Hills Bank. And just as of last year, about a year ago, I became the lender in the Coralville branch. So now I live in North Liberty with my husband and 3 small children.
Wonderful. Well, thank you so much for both jumping on. It's nice to have familiar faces, and I'm excited to talk about kind of where the mortgage world's going, and 2021 being the first Monday of the new year. And I just want to remind our audience, if you guys have any questions, you can pop them into the comment section, and we will be checking that here at the end. So if you have any questions, let us know, and we will try to get those answered towards the end. So let's dig in. And Tyler, will you kind of get us up to speed here? So tell us a little bit about what the past year was like, just so people can kind of get a foundation of where we're at and where we're going, where we're headed. So what did that look like in 2020, would you say?
Beginning of 2020, rates were about 1% higher than where they are now. So quite the drastic change. I'd say right around end of March, or beginning of April is when we started to see a drastic dip. That's when the central bank cut interest rates, rather the Fed rate or the prime rate, which ultimately affected the interest rates. So as that decline continued to happen, they cut the rate to zero. So that wasn't the interest rate actually being zero. It was the Fed rate, which ultimately caused the rates to diminish or to lessen. Now we're down to 2.66 as of the 24th of December. So quite the drastic change. I'd say a lot of the coronavirus and things of that sort had a dramatic effect on what the choices that the central bank have made so far. They're going to continue to affect these rates in the future. So,
Gotcha. Well, thank you for that update to kind of get us up to speed and just more understand of where they were and how low they actually are now. Jessica, do you want to kind of give us a little update as to what the rate is now, or what you would expect, this, let's say, coming year, next 90 days? I know it's super fluid. It's really hard to put a number on it, and it changes per client.
So there's no real way to predict what the rates are going to do. There's no crystal ball that's going to indicate this. There's things that are in borrowers' control, and there's things that are out of their control. So some things that can be in the borrower's control are, your credit score, your loan to value, how much down payment you're going to be putting down, and then just like what type of product or transaction that you're doing. So all of these can kind of determine where your rate's going to be. And the things that are out of our control are like the economy. And that's one of the largest factors that we don't have any control over. As the economy shrinks, mortgage rates tend to go down, with unemployment. And that's exactly what happened with COVID. Once it hit the U.S., we predicted that this was going to negatively impact our area significantly. And that's exactly what happened. So like right now, like Tyler was saying, 30-year purchase rates have been around like 2.25%, give or take. 15-year rates have been around 1.75%. Now refinance rates are a little bit higher, but our predictions based off of like the Mortgage Bankers Association, they're predicting that the 30-year mortgage rates will stay in the low threes into 2021. Now, things that could change this, they're not really anticipating them to go up until 2022. But if the economy gets back on its feet quicker and a lot sooner than what we're predicting, then we could see the rates go up a little bit sooner. So it's all kind of based on what happens once we hopefully get past the COVID-19 stuff.
Yes, which we definitely want to get past that, even if there's a little, interest rate, a little bit of a climb we'll take. We don't want a big blow up, but I definitely would love to see COVID go away and everyone back to normal. And that kind of leads great into our next question would be how to take advantage of these low rates. And I really would love to have you both answer that question. Tyler, did you want to start with how, us realtors, how our clients take advantage of that now, expected to rise?
Sorry, you cut out a little bit there. So I think Jessica kind of nailed it earlier when she was talking about the borrowers being in full control of their situation. So as far as taking care of their credit score, taking care of their, their debt to income ratio, what that looks like in terms of understanding. That's very important. Outside of that, they need to have the conversations with their lender, and if they are self-employed, they need to have those conversations with their CPAs to have an understanding of where they want to be in the next. That way, they're making those decisions.
I lost you a little bit.
Did you? Did I cut out?
I gotcha. So conversations with your CPA if you're self-employed, and to check with the debt to income ratio, things like that, just to make sure you're set up for success.
Absolutely.
Yeah. Jessica, do you have anything to add to that? I think Tyler did a good job of kind of encompassing everything, but I would love to hear anything you have to add.
Yeah, I mean, if you're in the market to purchase right now, the low rates can give you a little bit more purchasing power. The low rates give you potentially like a higher purchase price because your debt to income ratios may be more in line and may be better on the guidelines and everything. So taking advantage of the low rates right now is beneficial to a lot of people. But when shopping around, you need to take in consideration a couple of different factors, getting pre-approved and stuff, what the rate is and the closing costs and everything. Don't just strictly look at the rate, look at the whole picture of everything. But the interest rates right now are so good that it is allowing a lot of people to purchase homes right now.
Yeah, I think those are both great points there for both of you. Just being able to have a little bit more buying power is what I typically tell my clients is with the interest rate low, you might be able to get that house you've always wanted or dreamed of. So it gives you just a little bit more oomph to get out there. And you guys both nailed on the head, getting pre-approved, setting yourself up for success. There's nothing worse than getting out there, falling in love with a house and not being able to get it. Just the inventory is low. I'm sure you guys have clients just ready to buy now if it popped, and your clients are, in the right position to make a move where if you're not pre-approved, you don't have all your, I guess, ducks in a row, you could have some surprises along the way. So any other comments you guys have, anything else you would like to get out there to the realtors that are watching our live broadcast, anything like that?
Have your borrowers talk to us first before they go look for houses.
Yeah.
Got it.
Once people see it on paper, they can be a little shocked at what a monthly payment truly is. So, before you start looking at a certain price range, just make sure that on paper everything looks okay and it's a number that's not gonna take you back.
Yeah, that monthly payment can gradually increase the higher you go and things like that. So that's
A
definitely
good point, Jessica, is making sure they understand the risks that are involved. It's such a huge commitment, whether it's a 15-year fixed or a 30-year, not even just a fixed, just a 30-year or 15-year. Quite a commitment to make. So understanding have the ability to repay that mortgage is very important.
Yes, absolutely. Well, thank you guys so much for jumping on with me. I know it's Monday morning on a new year. And I think now we're all ready to dive right into the rest of the day. So thank you so much. It was great catching up with you guys, and I hope you have a wonderful day.
Thanks.
Guys.
Thank you.